Hello, everybody, and welcome to Smack the Markets Trading Room weekly market wrap for weekend in the 19th of October. Now, this week was a little bit of an interesting week where we had the European summit and those Brexit negotiations going on, and that made us a little bit shy for trading some of those markets. We did try to get into sterling markets and also euro markets to try and sort of take advantage of some of these potential moves, but it was a little bit challenging. We managed to get a couple of euro markets, but none of the sterling ones. So let's take a look at the markets that we traded this week and how we traded the trade in the trading room. Now, the first one here was euro against the Kiwi. This was a swing play short. From the outset this week, at the beginning of the week, right the way through, the euro has been particularly weak. We tried to get sort of positions in here, and in fact, this was one of the best ones that we captured earlier on in the week. It was against the weekly trend, as we can see, so we wanted to be able to get out before this level here on the weekly was tested, and that's this lower level here, or this 175 level that we can see on the 4-hour chart. So the actual trade that we took was back up here at 177. So this was a breakout of 177 and a turnaround of trend on the 4-hour time frame. This market, 177 has been a very significant level on this market, and we took the trade here on the 60-minute chart. So on the 60-minute chart, we waited for the breakout here. This is the level here that we got triggered into the trade. We got our stop behind the previous swing high, the sort of lower high up here, and then we're looking for our final target level, which is this lower level down here. This is the level that we saw there on that 4-hour time frame. So we can see what happened. Once the market triggered into the trade, it pretty much sort of went down, helped with a bit of news overnight from the Kiwi, and tested this level nicely. Since then, of course, the Euro Kiwi has continued to move short and has actually broken that weekly level. So it's been particularly weak all week long. Now, the next trade that we took here was Aussie CAD. Now, again, this was the idea of this was really based from the higher time frames. It was a rejection of the weekly trend here. We're looking for this weekly trend to continue short. There was a cluster of all sorts of levels and fib points here on the weekly chart, and we were looking for this daily here to roll over and continue back down to its lows. So if we come down to the lower time frame, we got the entry here on the 30-minute chart. So it was a breakout here, and we took the breakout, and it was a combination here of a breakout and a moving average setup. So the actual setup here was the bearish candle back here in the moving averages. In fact, this was a little bit of a mistake on my part. So the entry was correct. What happened was the initial stop was just above the high of that bearish candle, but I didn't close my orders in time. And what happened was the market moved a little bit higher, then it moved down and triggered the trade open. It still made perfect sense on the higher time frames, so it was still a valid trade. And as we can see, eventually this one captured a couple of targets. Now, we actually took another trade here on Aussie CAD. So we were looking for this market to continue much further, and we're looking for that weekly trend to fulfill itself. So what we'd like to try and do is to scale into these markets, especially once we've booked profits. So we took another trade here once as you can see a little bit later on, once the market pulled back up into this sort of cluster of previous congestion in the market, also back up into the moving averages and pivot points, there was a trigger candle here that we took another moving average trade short. This one didn't quite hit first target before turning around and getting stopped out. So this was the losing trade that we had this week. Now let's take a look at the final trade that we took here, which was also on another euro market. This was euro dollar. Now this one was trading this 115.50 level down to 115. So it was this rejection here of this, or breakthrough this level here on the 4-hour, down to this first level that we see here, this 115 area here on the 4-hour chart. That was the move that we took. And if we come down to the lower time frames here on the 15-minute time frame, this is the combination trade that we took. So it was a breakout short, but also it was a moving average play as well. So we waited for the breakout, caught the pull back into the moving averages. Here was our bearish candle setup. So it was a break below the low, stop above the high. You can see how this actually sort of played out. We left this one in overnight, and eventually this one took 3 targets. So that's how we traded the week. This week in the trading room, we had 4 trades, 3 winners, 1 loser, and a total of 6.5% return. So not too bad for a week's trading. Hope it helps. Certainly hope you found it useful, and I look forward to speaking to you next time. Bye for now.